Sushant, traders have been combing through the latest OPEC and IEA monthly reports. Anything that stood out for you?
Well, I think everybody agrees that there is enough oil in the market. So obviously, there are some differences between the oil demand growth forecasts. So we have it about 1.4 million barrels per day of demand growth for this year. But obviously, a key uncertainty which was around when we talk about demand growth was around the U.S.-China trade dispute. Now, there has been some resolution in the market with the signing of the last week's trade deal, which has reduced the downside risk to the oil demand outlook for this year, at least for now. So we'll have to monitor how the progress is between that agreement. So we still believe the demand growth for this year will be stronger than last year.
Also wanted to ask you about one particular aspect of the IEA report, which really highlights how non-OPEC supply growth is continuing to rise. And perhaps what's most interesting is that the IEA also identified that the composition is changing. So it's not just the United States, it's Norway, it's Brazil, it's Canada that are all now contributing to this global oversupply situation, as you put it. What are the implications for OPEC if it continues to lose market share?
Well, I think first of all, you're absolutely right. I mean, so we are also seeing that there will be a larger proportion of non-OPEC, non-US supply coming in the market. So in the last few years, it has always been US supply higher than other non-OPEC producers. But this year, we are seeing a higher proportion of supply coming in from Brazil, Canada, Norway, and we are seeing a slowdown in the US shale oil sector. Although there is a growth, but it's slower than last few years. Now, OPEC strategy has always been, torn between market share and market balance. So OPEC production cut, which was started in 2017, they have been rolled over many times to keep the market in balance. So even today, they are forecasting, with the last December meeting, they have rolled over 1.2 million barrels per day production cuts until March 2020, and also added in 0.5 million barrels per day of additional cuts during that time. Now, this just indicates that even OPEC is aware that there will be oversupply in the market, at least in the first half of 2020, and they will have to manage that oversupply somehow by either higher compliance or even deeper cuts for longer time. So, one thing which we are seeing in our numbers is that the market is still not ready to absorb the production cuts back, even for whole of this year. So we expect OPEC to continue cutting production for 2020.
Okay, very interesting. And, it's also interesting to see Mohammed Barkindo pointing out there that he does see demand increasing throughout the course of the year. But the OPEC report also said that that increase in demand is going to be offset by this rise that we see in non-OPEC supply. So how is OPEC going to navigate that when it comes to this March meeting? Would you expect them to cut production even further?
Well, as I said, I think we for the whole of 2020, we expect an oversupply situation for all the quarters. It's more pronounced in the first half of 2020 than in the second half. So, they will have to really, reassess the situation come that meeting. But we expect them to roll over production cuts for the whole of 2020.